Hey everyone, welcome back to the deep dive. It looks like a bunch of you have been asking about building wealth.
Yeah, that's always a popular topic.
It is. So today we're taking a deep dive into investing in stocks for beginners.
Awesome.
And for this one, we'll be using a popular YouTube video from Riqueza Vital called
Right.
Guicha Papukambucha para invertir a acciones.
Mm.
Invertir a acciones 2024.
Catchy title.
It is, yeah. So hopefully by the end of this deep dive, we can help you feel more comfortable with the idea of investing.
You know, getting started with investing can seem pretty intimidating,
You can.
especially with all the jargon and
Mm.
complex strategies out there and just all the information.
Right. So let's just start with the absolute basics.
Okay.
When we say stocks,
Yeah.
what are we actually talking about? Like, how does the stock market even work?
Well, you can think of a stock as like a little piece of ownership in a company.
Yeah.
So when you buy a stock, you're essentially buying a tiny slice of that company.
Hmm.
And as a shareholder, you get to share in both the profits and, of course, the risks that
Yeah.
come with owning a piece of that business.
That makes sense.
Hmm.
So then how does the price of a stock actually change?
Yeah.
Like it's constantly fluctuating, right?
Right.
But what drives those changes?
Yeah, it's a great question. The stock market is essentially a giant marketplace
Okay.
where buyers and sellers come together to trade stocks.
Right.
And just like any other marketplace, the price of a stock is determined by
Supply and demand.
supply and demand. Exactly.
Oh.
So if more people want to buy a particular stock
Mhm.
than sell it, the price is going to go up.
Okay.
And conversely, if more people are selling than buying, the price will go down.
So it's all about that balance.
It is, yeah, the
Yeah.
balance between those buyers and sellers.
Right. And what are some of the things that influence that balance?
Oh, there are so many factors that can influence that. You've
Right.
got company performance,
Mm.
economic news, even global events.
Oh, wow.
All of those can impact how investors feel about a particular stock, which then drives
Buying and selling.
that buying and selling activity.
So it sounds like it's a pretty dynamic and
Yeah.
unpredictable environment.
It definitely can be. And that's why it's so crucial to understand your own risk tolerance before
even thinking about it.
before jumping into the stock market.
That's something that the Riqueza Vital video really emphasizes too,
Yeah. It's
right from the start. Why is that so important to figure that out? Like, why is risk tolerance such a big deal?
Well, because investing in stocks always involves some level of risk, right?
Right.
You could potentially lose some or even all
Yeah.
of your investment.
It could happen.
So figuring out your risk tolerance
Okay.
really helps you determine how much risk you're comfortable taking on.
Right.
It helps guide your investment decisions,
Okay.
and it helps you create a portfolio that aligns with your overall financial goals. Exactly.
I think it's easy to get caught up in the excitement
It is.
of oh, I could make money. But forgetting that,
Right.
there's always a chance you could lose.
There is.
Important to remember.
Absolutely. And there's no one-size-fits-all answer when it comes to risk tolerance.
Okay.
It's a very personal decision based on factors like your financial situation, your investment goals,
Right.
and your comfort level with those market fluctuations.
So someone who's more risk averse
Yeah.
would probably opt for, those more conservative investments.
Right.
But someone who's maybe okay with more risk would be okay with those volatile stocks.
Yeah. That's a good way to put it. And that's the beauty of the stock market, is
Yeah.
that there are options for investors of, all risk profiles.
That's awesome. So let's say we've taken a hard look at our finances
Okay.
and we've figured out our risk tolerance,
Yeah.
and now we're ready to explore some specific stocks.
Let's do it.
The video goes into two main approaches to selecting stocks.
Okay.
So you've got fundamental analysis
Right.
and technical analysis.
Yeah.
Can you break those down for us?
Sure. Think of fundamental analysis as being like a detective
Yeah.
investigating a company's financial health.
Oh, okay.
So you're digging into their financial statements, you're looking at their earnings, their expenses,
Their debt.
debt levels, yeah, and trying to determine their overall financial strength and growth potential.
So it's like doing a background check on a company before you invest.
Yeah, exactly. You want to make sure you're investing in a company with a
Solid.
solid foundation. Now, technical analysis
Okay.
is a little bit different. It's
Yeah.
less about the company itself
Mm-hmm.
and more about analyzing the stock's price movements and trading patterns over time.
Oh, okay.
Yeah.
So technical analysts are looking at charts and
Yeah.
graphs and trying to identify those trends.
Precisely.
Okay.
They're using a variety of tools and indicators
Right.
to try to predict those future price movements
Mhm.
based on past performance.
I mean, it's interesting how those two approaches are so different. Like, they offer completely different perspectives.
You do.
Do most investors stick with one or the other, or is it common to blend them?
You'll find investors that, swear by one or the other.
Oh,
But a lot of investors use a combination of both fundamental and technical analysis
to make their decision.
to make their investment decisions.
So it's just all about, like, which one feels better for you?
Yeah, finding the approach or the blend of approaches that feels most comfortable and effective for you.
But regardless of which approach you choose,
Yes.
one key principle to always keep in mind is
Diversification.
don't put all your eggs in one basket.
That's it.
Right.
Diversification is all about spreading your investments
Okay.
across different stocks, different sectors.
Like, what kind of sectors are we talking?
Oh, instead of putting all your money into just tech stocks,
Right.
you'd want to diversify into things like healthcare, energy, consumer goods, and so on.
Okay, so it's like spreading it out.
Spreading it out, yeah.
So how many different stocks should someone aim for
That's a good question.
to be diversified?
There's no magic number,
Okay.
but a good rule of thumb is to aim for at least 15 to 20 different stocks
Wow.
across different sectors.
Okay.
And of course, diversification isn't just about the number of stocks you own.
Right.
It's also about ensuring you have a good mix of different types of companies, industries, and even geographic regions.
Okay, so spreading it out even further.
Yeah, exactly.
So we've got a better understanding of what stocks are,
Yeah.
how the market works,
Mm-hmm.
the importance of risk tolerance,
Huge.
and the two approaches to stock selection.
It's a lot, but it's important.
It is, yeah. So now I'm curious about, like, the practical steps involved
Okay, yeah.
in actually starting to invest.
Okay.
What's the first step?
Well, before you can buy any stocks,
Yeah.
you'll need to open what's called an investment account.
Okay.
And this is where you'll deposit your money and then use that money to buy and sell stocks.
All right, so it's like a bank account,
Kind of, yeah. Think of it like a bank account,
but for investments.
specifically for your investments.
Got it.
Exactly.
But how do you choose the right one?
Yeah.
Because there's so many different,
Platforms.
platforms and brokerages out there.
That is a great question, and it's an important one because the platform you choose
Okay.
will have a big impact on your investing experience.
So what are some things to look for?
All right, so first and foremost,
Yeah.
you'll want to consider fees.
Fees.
Brokerages typically charge commissions for buying and selling stocks.
Okay.
So it's crucial to compare those fees and see how they align with your investing style and budget.
So that's like one fee to be aware of. Are there others?
Yeah, some brokerages might also have account maintenance fees, inactivity fees,
okay.
or other charges. So it's important to,
Read the fine print.
read all that fine print,
Yeah.
understand all the potential costs involved.
Okay, so fees are important.
Huge. Well, another important factor is the platform's user interface.
Oh, okay.
So you want a platform that's easy to navigate, intuitive to use, offers the features and tools you need to manage your investments effectively.
Yeah, like I'm not the most tech-savvy person,
Right.
so I would need something easy.
Exactly. Yeah. Some platforms are more basic,
Okay.
while others offer advanced charting tools,
Ah.
research reports, and even educational resources.
So it's about finding a platform that kind of like matches
Your level.
my level of experience.
Exactly. And your investing needs.
What about customer support? Is that something to think about?
Oh, absolutely.
Okay.
Investing can be confusing at times,
It can.
and you'll inevitably have questions
Yeah.
or need assistance at some point.
So you want to make sure they're there to help you.
Exactly. So look for platforms that have multiple channels for support,
Okay.
like phone, email, live chat,
Mm-hmm.
and ideally ones that have like extended support hours.
Yeah, that's a good point. So it's not just about like the platform itself,
Yeah.
but also the support
The support you can expect
that they provide.
when you need it.
Okay. So you've found a brokerage that meets your needs.
Right.
You've opened your account.
Mm-hmm.
What are some key concepts to grasp
Okay.
before you start buying and selling?
Yeah. So understanding different order types is essential.
Okay.
So you've got a market order, which buys or sells at the best available price immediately. And then you've got a limit order,
Okay.
which allows you to set a specific price
Right.
at which you're willing to buy or sell.
So it's like a market order is like,
Like buy now
yeah.
at whatever the price is.
But a limit order is like only buy if it hits
Exactly.
this price.
Exactly.
Okay.
And then there's margin investing,
Margin investing.
which involves borrowing money from your broker to buy more stock.
Oh, wow.
It can potentially amplify your gains,
Gains, yeah.
but it also increases your potential losses. So it's important to understand the risks involved there.
So I'm hearing it's like Risky.
It can be.
Okay.
Yeah. And then
Uh-huh.
finally, you might come across ETFs,
ETFs?
which stands for Exchange Traded Funds.
Okay.
And they essentially hold a basket of stocks,
Oh, interesting.
offering instant diversification.
So it's like buying a pre-made portfolio.
Yeah, you can think of it that way. Yeah.
That's pretty cool.
It can be a great option for investors looking for a simple way to diversify their portfolios.
Wow, we've covered so much.
We have.
We've talked about what stocks are, how the stock market works, setting investment goals, choosing stocks, opening investment account,
Yeah.
even some key concepts like order types and margin investing.
It's a lot to take in, but we're just getting started.
Oh, really?
There's so much more to explore in the world of investing.
Well, I'm already feeling much more informed,
Good.
and I'm eager to dive deeper
Let's do it.
into the specifics.
Okay.
But before we do that,
Yeah.
let's take a quick pause and come back to explore some more advanced concepts
Okay.
and strategies for beginners.
Sounds good.
All right, stay tuned.
So are you ready to dive back in?
I am. I'm ready to keep going.
Awesome. We've covered a lot, haven't we?
Yeah, we have.
But I'm curious, what's standing out to you so far?
I think just getting a grasp on those different approaches to
Ah.
stock selection, like fundamental and technical analysis,
Yeah.
has been really helpful.
Good.
But, also realizing how much more there is to learn,
Of course.
and that can be kind of overwhelming. But
Yeah, it's a lot.
it's exciting, too.
It is.
So I'm wondering, what about specific strategies
Yeah,
for actually investing in stocks?
that's a great point. We've laid the groundwork.
Right.
But now let's dive into some practical strategies.
Okay.
So the Riqueza Vital video recommends 2 time-tested approaches
Okay.
for beginners: long-term investing
Okay.
and dollar cost averaging.
Those sound familiar, but I'd love to hear more about, how they work.
Sure. Well, long-term investing is all about patience.
Okay.
Instead of trying to time the market or chase quick profits,
Yeah.
you're essentially investing in companies you believe in for the long haul,
Oh.
often years or even decades.
So it's about, riding out those market ups and downs
Exactly.
and focusing on that long-term growth.
Yeah, the long-term growth
I
potential.
textbook solid companies.
It's like planting a tree
Okay.
and nurturing it over time, knowing that it will eventually bear fruit.
I like that analogy.
But this does require careful research
Right.
and selection of companies, with strong fundamentals and a proven track record.
So research is key.
Research is always key.
What about dollar cost averaging?
Dollar cost averaging is a fantastic strategy for beginners
Okay.
because it helps mitigate the risk of that market volatility.
Okay. Yeah, because that can be scary.
It can be. Instead of investing a lump sum all at once,
Okay.
you invest a fixed amount of money at regular intervals,
Oh, okay.
regardless of the stock price.
So I could decide, okay, I'm going to invest $500 every month, no matter what.
Exactly. Regardless of whether the market is up or down.
Okay.
This way, you're buying more shares when the price is low,
Wow.
fewer shares when the price is high.
So it averages out.
It averages out over time.
That sounds less emotional.
It definitely is. It takes some of the emotion out of it,
Yeah.
and it encourages that disciplined approach to
Mhm.
investing, which is so essential for that long-term success.
So we've chosen our strategy.
Yes.
What's next?
Well, the next step is to start identifying those specific stocks
Okay.
that align with your investment goals and
Mhm.
your risk tolerance. And remember, choosing individual stocks requires research and careful consideration.
So, what are some things we should be looking at?
Yeah, so there are many factors to consider,
Right.
but some key indicators can give you a really good sense of a
Okay.
company's financial health
Mm.
and growth potential.
Mm-hmm.
For example, earnings growth is crucial.
Earnings growth.
Yeah, it tells you how much a company's profits
Okay.
are increasing over time.
Okay.
So a company with consistently strong earnings growth, that's generally a good sign.
Yeah, that makes sense.
What else?
Another important one
Okay.
is the price to earnings ratio.
The what?
The price to earnings ratio,
Okay.
or PE ratio,
The PE ratio.
which compares a company's stock price to its earnings per share.
Okay.
It can give you a sense of whether a stock is overvalued or undervalued.
Okay, so how do we know if it's good or bad?
So a high PE ratio could indicate that, investors are expecting strong future growth,
Oh, okay.
while a lower PE ratio might suggest that, the stock is currently undervalued.
Gotcha.
But it's important to remember
Yeah.
that the PE ratio is just one piece of the puzzle.
Right.
It's essential to consider other factors, such as, the company's debt levels,
Okay.
cash flow,
Yeah.
and overall industry outlook.
So you got to look at everything.
Got to look at everything. It's like being a detective
Piecing together different clues
to get the full picture.
to get that complete picture. Now, the video also mentions some specific platforms
Okay.
that are considered user-friendly and reliable
Okay.
for beginners. So they highlighted Robinhood, eToro, and TD Ameritrade as popular options.
Okay, cool.
Yeah.
Are there any, like, potential downsides or considerations for beginners when using these platforms?
That's a smart question. So while those platforms are great for getting started, they may not offer the same depth of research or advanced trading tools as some of the more like established brokerages.
So it's about finding the right balance.
Finding that right balance.
Between like ease of use and having those resources.
Exactly.
But what happens if like one of my investments isn't doing well?
It happens.
It happens.
It's important to remember that not all investments will be winners.
So like, what do I do?
Yeah.
If I have a stock in my portfolio
Yeah.
that's consistently losing value?
Well, it's natural to like feel hesitant about selling a losing stock.
Right.
But sometimes it's the best course of action.
So it's okay to
cut your losses sometimes.
because I'm the type of person that's like, no, it's going to go back up.
I get it.
You know?
Yeah.
But that's not always true.
No, sometimes holding on to a losing investment, hoping it will,
Magically.
magically turn around,
Come back.
can sometimes lead to even greater losses.
Oh, okay.
So if a stock is consistently underperforming and there are no clear signs of a turnaround, it might be time to sell it.
Right.
And reinvest those funds into a more promising opportunity.
Okay.
So it's about being proactive and making those adjustments as needed rather than just passively
watching your
portfolio.
Right. Okay. So there's one more concept I want to touch on.
Okay.
And that's rebalancing.
Rebalancing.
We've briefly mentioned it, but I'd love to hear more about why it's so important.
Sure. Rebalancing is essentially about maintaining your desired asset allocation.
Okay.
Which is the mix of different asset classes like stocks and bonds in your portfolio.
Right.
And over time, some investments will naturally outperform others.
Right. Like if my tech stocks are doing great, they might represent a bigger portion.
Bigger than you intended.
Yeah, than I wanted.
Exactly. That's where rebalancing comes in.
Okay.
By periodically selling some of your high-performing assets and buying more of the underperforming ones.
So you're bringing it back.
Yeah, you're bringing your portfolio back in line with your original risk tolerance and investment goals.
So it's like you're fine-tuning it.
Yeah, you can think of it that way.
So it's always matching like what I want.
It reflects your desired level of risk and your overall investment strategy.
How often should someone rebalance?
There's no set rule.
Okay.
But most financial advisors recommend reviewing your portfolio and considering rebalancing at least once or twice a year.
Gotcha.
You can also rebalance more frequently if your portfolio experiences,
big shifts.
Yeah, significant shifts.
Because of the market.
Because of those market fluctuations.
Okay. I feel like all of these different pieces.
They're coming together.
Yeah, they're finally coming together.
Good.
So it's about like, having that understanding of the basics, choosing the right strategy.
Right.
And then like actively managing your portfolio.
Exactly. It's a journey.
It is.
And it requires ongoing learning and adaptation.
I feel like we've made good progress on our journey.
I agree.
Today. We've gone from like the basics of stocks in the stock market to exploring specific investment strategies and even like delving into those more nuanced concepts.
Like rebalancing.
Yeah.
Very important.
It is, yeah. But before we wrap things up, I think it's time for like our final thought.
I love it.
Right.
Something to ponder.
Okay.
As we finish up this exploration.
I'm ready.
So we've talked about those two main approaches to stock selection, fundamental analysis, and technical analysis.
Yeah.
As you continue on your like investing journey.
Yeah.
Which one feels like more intuitive to you?
It's fascinating how different investors gravitate toward different approaches.
Yeah.
Some people love digging into those financial statements.
Yeah.
And like dissecting a company's business model.
Right.
While others find more comfort in the patterns and signals of technical analysis.
It's like choosing your own adventure, but with investing.
I like that.
Right.
It is.
So are there any like clues that might suggest which approach is like a better fit for someone?
Well, if you enjoy puzzles research and like delving into the nitty-gritty details of how businesses work, fundamental analysis might be your jam. But if you're more visually oriented
and enjoy spotting patterns and trends, technical analysis could feel more natural.
It's almost like some people prefer reading like a detective novel, while others are drawn to like the visual language of art.
That's a great analogy.
Right.
It really is. And the important thing is to find an approach that you trust and can stick with over time.
And that might even evolve as you get more experience in the market.
Absolutely. It's a journey of continuous learning and discovery.
But even before you dive deep into either approach, I think there's like a simple action step.
Yeah, what's that?
That you can take today to get the ball rolling.
I love actionable advice.
I know, right?
What is it?
What should our listener do?
Spend just 15 minutes researching a company or an industry that genuinely interests you.
So not just picking randomly.
No, something that sparks curiosity.
Like maybe a company whose products they use every day.
Yeah, could be.
Right.
Or a sector that they believe, you know, has a bright future.
Okay, yeah.
Read an article, watch a video, explore a company's website. Just take that first step toward familiarizing yourself with the world of investing.
It sounds so simple, but I feel like it's really powerful.
It can be.
That initial, like, spark can lead to so much more.
And even if you decide that stock picking isn't for you, understanding the fundamentals of investing is such valuable knowledge to have.
It is, yeah.
It really is.
It's about, like, empowering yourself to make those decisions.
Yes, those informed financial decisions.
Regardless of your path.
Exactly.
Well, on that note, we've covered a lot.
We have.
In this deep dive.
We sure did.
From the very basics of stocks and the stock market. To those different investment strategies. Key indicators, diversification, rebalancing.
All very important.
It's been quite a journey.
It has.
And I hope our listeners feel a lot more equipped.
I hope so, too.
To navigate the stock market.
It's exciting.
It is.
But it can be intimidating at times.
It doesn't have to be a mystery, though.
It doesn't.
Right. It's not just a game for experts. Like, with the right knowledge and a willingness to learn.
Exactly.
Anyone can start building wealth through the stock market.
Absolutely.
So thanks for joining us.
Yes, thank you.
On the Deep Dive. Until next time, keep learning, keep exploring, and keep investing in yourself.